Hello again, traders. Welcome back to the Pro Trader Network. You can see that this is part 6 of our market structure series. And in this video, I'm going to walk you through the process I use at the beginning of every trading week and every trading day to identify potential opportunities, starting with my higher time frame, moving down to my swing trading time frame, and then translating that into potential opportunities intraday. Well, the very first thing I do, traders, is I look left because structure leaves clues, and then I'll identify these key levels of support and resistance on my higher time frame. In my case, that's my daily time frame. I zoom out, I look at the key levels of support and resistance, sore thumb highs and lows, and key price areas. I then go to my swing trade time frame, which is my 4-hour time frame, and then I look and see if there's any confluence of current price action and these higher time frame support and resistance levels. I'll start to look on my swing time frame for candle patterns and market harmonics, and then I'll pull in my fibs to confirm or identify any further confluence to give me clues and identify potential trading opportunities. What I'm trying to do here, traders, is prepare for all potential scenarios. And then, of course, I apply my trade plan to those potential scenarios so that I can go either long or short. And if the market begins to consolidate, I can implement a range trading plan to take advantage of the cycles in the range. If I'm a trend trader, then I would be looking for trend continuation opportunities. And then if I was a counter trend trader, I'd be looking at the trend momentum to shift, for the trend to reverse and take advantage of any candle patterns and divergences that may identify a counter trend trade opportunity. But regardless of what type of preparation I make, traders, I always wait for a valid signal before I execute any trade. I never speculate, I never jump into the market without first receiving a valid signal based on my trade plan and trade system. Now, I'm going to walk through this process, traders, by continuing to use the Aussie dollar chart. I'm going to start on the daily chart, traders, which is my higher time frame, and then I'm going to use my 4-hour time frame. That's my swing trading time frame. I'm going to apply all the tools that I have at my disposal based on market structure, and then see if I can identify not only swing trading opportunities, but perhaps other opportunities that may play out sooner on my intraday time frames. Let's take a look at that Aussie dollar chart. All right, traders, this is my Aussie dollar daily chart, and this is how I start doing my analysis with each pair in my 8-pair portfolio every Sunday at the beginning of each trading week. I start with the daily chart, and I notice sore thumb highs and lows as they relate to current price action. So the very first thing I do is I put my horizontal lines on key levels, key areas of support and resistance. So I'm going to pull this line in. I'm going to pull this key level of support in here. And then I'm going to pull this key area in right here. So those are, to me, germane to current price action. Maybe one right in this particular area. So these are the key price areas that I'm looking for price to either continue rallying to retest, or if there's a sell-off, continue selling off to retest. So this is the very first thing I do. I start with a daily chart, traders, to give me clues about potential swing trades on my 4-hour chart. On swing trading, the 4-hour chart is my trading time frame. But I also look at my 4-hour chart for potential opportunities that may occur during intraday trading. So all of these time frames interact to give me clues. Remember, structure leaves clues as to potential setups and trading opportunities for both swing trading and intraday trading. So now, traders, we're going to look at our 4-hour chart and see if there's any confluence with current price action on our 4-hour chart. And these blue lines, if you recall right here, these were our market harmonics lines when we looked at this chart in our last video. Let's take a look at that 4-hour chart. All right, traders, here's my 4-hour chart, and you can see price action has actually been kind of contained in this channel right here. And I notice something right away. Draw another line right here, traders. This key level of resistance. I have a double top right here with bearish divergence. If I'm a counter trend trader, I would be looking for trade signals, and one of my valid signals is a complete bear rotation, which has not occurred. So when I look at this chart, I am still a buyer. Traders, if you recall, on my daily chart, my trend line was gray, and I might have a trend trading system that says if my trend line on my higher time frame, in this case the daily time frame, is gray, then I am a buyer only on my trading time frame. I'm looking here at my swing trading time frame, the 4-hour, and what do I see? I see a gray trend line. So now my trading system might say if the trend line on my trading time frame is gray, I am a buyer only and I'm only looking for buy signals. You got to remember this price action that we're looking at right now, the last few candles occurred on Friday. I don't trade Friday afternoons. However, I can take a look at this price action, take a look at these key levels of support and resistance that occurred during this channel, and perhaps go down to a 1-hour chart or a 15-minute chart within this channel and look at some different buying opportunities based on the trend line of these higher time frames. Clearly, the market is in an uptrend. Look left, structure leaves clues. What's the definition of an uptrend? A series of higher highs and higher lows. And clearly, we can see that that's occurred right here. Higher lows, higher highs. A beautiful uptrend channel. What am I looking at right here, traders? I'm looking at the possible ending of the momentum of this trend with price creating a double top with bearish divergence. And now I'm waiting for a valid signal if this setup presents a valid counter trend opportunity. However, I'm still looking for buys if I'm a trend trader. Where might this market rally to? Well, I know it's going to probably retest this previous key level of resistance. It might even form a triple top with this continuing bearish divergence. Or it might go up to this previous key level of resistance that we identified on our daily chart. So if price breaks above and closes above this key level of resistance in current price action on my 4-hour chart, I would be looking for a signal, my RSI across my trade signal line, and get long and look at potential profit targets right here at this previous key level of resistance that I identified on my daily chart. So I say if the market continues to rally, then I look for a break above, close above of this previous level of resistance. And if the market breaks above and closes above that level, then I'll be looking for potential profit targets up to this previous key level of resistance that I identified on my daily chart. Really simple. If this previous level of resistance is tested and bearish divergence is still present, then I would be looking for a counter trend trade on an intraday time frame, perhaps a 1-hour or 15-minute, after a bearish rotation has occurred on one of those smaller time frames, confirmed by the bearish divergence setup on this 4-hour chart. So I'm always using the interplay of these higher time frames to take advantage of potential opportunities on my intraday time frames. I know that a counter trend trade is going to present itself earlier on a 15-minute or 1-hour chart, confirmed by this bearish divergence with a double top or maybe a triple top on this 4-hour chart. I understand the risk, I understand the probability of that trade playing out, but I can also take advantage of that on an intraday time frame, and then I can wait for a bearish rotation on my 4-hour chart, pull in my fibs, and say if I get a counter trend trade, where will price most likely retest? Well, I know it's going to retest this previous level of support right here. Look left, we had some consolidation here. I would look at the 382 retracement with potential down to the 618 retracement. Let's pull in another key price level here. Potential test right there at the 382. Remember, resistance becomes support, and look at this, another potential area right below the 618. So now I've identified 2, 1, 2, 3 potential profit targets that now I can translate to my intraday time frames for counter trend trades. It's important that you begin to understand that this top-down analysis is incredibly powerful when looking at just plain old price action. And traders, very important to remember that this is just one pair. Once you begin to expand the number of markets in your portfolio, this is why I continue to say, do your analysis, look for the best setups. You don't have to concentrate on every pair. I take notes, identify the best potential setups, and then I concentrate on those pairs. I wait for those trades to play out, and if they don't, I begin looking at my other notes. I'm constantly scanning my pairs. Then when a valid signal presents itself, I'm prepared for either scenario. I've just identified the potential rallies on this 4-hour chart, and I've just identified the potential sell-off targets on this 4-hour chart. So now I can take a swing trade for a valid signal on the 4-hour chart, and I can take intraday trades on the 15-minute and 1-hour charts based on everything I've just identified here on this 4-hour chart. All right, traders, let's summarize. What have I looked at? I started with my daily time frame for direction and potential setups that I can execute on my swing trading time frame, my 4-hour time frame. Then I used my swing trading time frame for potential direction and setups that might play out on my intraday time frames, my 15-minute and 1-hour. And I do this for every pair in my 8-pair portfolio. I do the same thing every day, traders. I revisit these time frames. I revisit how the daily price action has played out on each of these pairs, and I run through the same analysis. It takes me about maybe 8 to 12 minutes to do all the pairs, just a couple minutes a pair, and I make notes. And that's how I prepare myself every day for any potential scenario on each of my portfolio pairs. And notice, traders, I use all of the market structure tools available to do my analysis. So I start on my higher time frame, I identify key levels of support and resistance, key price areas. I drill down to my swing trading time frame, throw additional areas of support and resistance on there that may play a part in my intraday trading. I bring in my market harmonics. I bring in my fib tool. When I see fib setups, I look at divergence, and then I simply wait for a valid signal based on my notes to play out on the appropriate time frame, intraday trade or swing trade. And that's it. I do the same thing every day. I use the same process. I use the same tools. And why do I use these tools, traders? Well, all price action is based on market structure, period. For success in trading, you have to have a firm understanding of market structure, and you have to know how to read a chart. And if you're a new trader, I wouldn't expect you to know all this stuff because it takes a lot of time and a lot of practice. However, ultimately, you're going to want to be able to sit down, zoom out, look at sore thumb highs and lows, look at key areas of support and resistance, these key price levels, and then begin to build a scenario for whatever may happen during price action. And if you use these same steps every time and you take notes, now you're sitting down to the market, you've identified all the possible scenarios, and you can take action. All you're simply waiting for is a valid signal, depending on the type of trader you are. If you're a trend trader, waiting for a signal in the same direction of the trend. A counter trend trader, of course, you're waiting for the momentum of the trend to reverse. And then if you're a consolidation trader, you're simply going to identify a range and then trade between that range. But whatever type of trader you are, identifying this market structure will give you insights, give you potential opportunities, and once these opportunities play out, you're completely prepared. You're not catching up, you're not nervous, you have no anxiety. And of course, now that you've prepared for all those scenarios, you're just simply waiting for a valid trade signal based on your trade system and your trade plan. The important thing to remember, traders, is you are prepared. Nothing is a surprise. If the market rallies, you're waiting for a valid signal. If you're a counter trend trader, you're waiting for a counter trend signal. And if you're a consolidation trader, you're waiting for the range to establish itself and you're trading the cycles of the range. No anxiety, no guessing, no doubt. You've done all the homework ahead of time. All you have to do is execute that valid signal, place stops and targets, and then implement your money management and risk management systems. All right, traders, thank you so much for joining me for this 6-part market structure series. We will continue on the Pro Trader Network blog with more training videos in the future. And as always, great to have you back here at the Pro Trader Network. Let's stay focused, follow our rules. We'll see you next time.